Hello guys, I'm Dexter. Welcome to this video, and it's been a very exciting month. There is, I would say, 20 to 30 plays across the entire month. Ever since we had DRUG as the main play, there's a lot of sympathy plays as biotech, technology, and a bunch of low flow stocks. So in this hype, it's a little bit different compared to the hype we had in February. The main play was BMR and the flow was a little bit bigger, and it was mainly AI play. Most of the flow that we traded in February was around 3 to 4 million, or maybe a little bit higher. Some we saw was 10 million float. And in this specific hype, pretty much all of them is trading anywhere between 700K to 1 million, and the majority of them are below 500K. So 200K to 300K float, which is not really tradable. It's considered to be a nano float, and I do see a lot of psychology is changing around on those low float in terms of the borrows and how you're supposed to trade them, and also some of the pre-market volume estimation is being changing a little bit as well. And let's get into those details in this video, and hopefully it will be helpful. And make sure click like the button and subscribe, and let's get into it. Alright, so the first one we want to talk about will be DRUG. This is the one that bought pretty much all of the volume out. The initial spike starting at $2 went all the way to 50. First green day, of course, I did not touch it. I touched it on the second day when it tested the 26 area. I was not expecting this one goes all the way to 36 and potentially causing a big breakout. On this specific day, I think I lost a little bit because when I was sizing down on the breakout, I shorted it in the 26 to 30-ish. Turns out it did not work out very well. It was also low float, and that did not hold overnight because the overnight rates was extremely expensive. I think it was 500% throughout the year, so it is about $1 per share overnight. Extremely expensive. Did not get the reward on the first red day because it's not really worth it. If you're holding 10,000 shares overnight, you will be paying $15,000. I do remember the rates at that point, so it was expensive. Then going into the following spikes went all the way to 80. I did try some in the consolidations when it was trying to consolidate in the 50 to 60-ish. Traded about 20 million shares, so overall $1 billion traded, and did not work out. And did a massive spike, cut the losses in the 65-ish, then went all the way down, was a little bit triggered on this one, then had its re-spike on the following day, shorted it into a spike. I think I made money going into this day and tried again. I think it was right here. I was hoping it breaks 41. Once the 41 breaks, either this goes all the way back to 20. And for majority of the multi-day runners, most of them fade 75% after its roundup, and this is a special one because it's been 2 weeks and this one's still holding at $50 level. Because it's a biotech, it doesn't have the photo patterns. I've been tracking biotechs for many years. This one gives me one of the warnings that I do not trade biotechs anymore. Took 3 losses on this one, just not really worth it. And also it's a very low float and the spread is kind of crazy. 200K volume can make the stock push it $10, and it can ignore the resistance as well. So it's very difficult to manage your risk on this one. The ticker that I made 300K was DJT. It had the resistance in the 38, so it tested 32, 33-ish. This is where I sized in, so let's go into the intraday level. So it broke down in the afternoon and it had its gap down and it showed really big weaknesses in the pre-market, also after market open. I shorted it in the 32-ish, was doing pretty big size because I think if there's a massive resistance in the 37 and we're topping at 33, it's not really worth it to re-break 33 and go test that 38 resistance again because there's multiple resistance up in the 40s, 50s, and 60s. I piled pretty big size into it, 100K shares, and once the breakdown happened, I was covering, adding the bounces, adding bounces. Overall was 350,000 again, and going to the second bouncing on the following day, I saw the re-breakout on the $29 area. This is where I cut it, my position. I took a very small loss on this one. I think the previous day was close to 380,000 and the last 20K or 25K on the second day. So overall was $350,000-$60,000 again. I'm going to the following breakouts and the overall thought process on DJT going forward in the next 2 weeks. So this is going to be a little bit tricky because it had its massive consolidation resistance in the 54, some resistance in the 40s. So if you go into July 15th, there is multi-layer of resistance between 38 and 43. So July 15th, right about here. This is the biggest consolidations and most concentrated volume stated in the 42 area. So let's see how it gaps on Monday. If it tested 42 in the pre-market and it showed that there's solid resistance in the 42 and we consolidate for another maybe 100 million volume, then that could be a topping sign that we could be swing short on DJT. I think it's been a little bit overextended from 10 to 40 and it's a multi-billion dollar stock. So of course the liquidity shouldn't be a problem. It's more about timing and risk management. And this is much easier to trade compared to DRUG.
Interested in trading like Steven Dux? It all starts with choosing the right broker. Dux Trading has partnered with Success Trader to supercharge your trading journey. By joining through Dux Trading, you can unlock 90 days commission-free trading at Success Trader. Experience trading like never before with superior short inventory with over 10 built-in locate sources, dedicated phone and chat support, early locate availability, and the opportunity to earn interest on any of your idle funds. Plus, enjoy competitive locate pricing that suits your trading style. Ready to elevate your trading? Simply click the link in the description below to get started. Now, let's dive back into the content.
VS was also a tricky one. It's very easy to get stopped out on this because it traded, I believe, was 25 million volume in the pre-market, and they had pretty much 300% spike in percentage after market open, busted through this pre-market high, and it's very easy to short against the pre-market resistance and get stopped down when they had a massive parabolic. Of course, they faded all the way down, and if you don't partial size and your piled size into against pre-market high, and I would imagine this would be a relatively big loss. So going forward, if you see that pre-market volume is extremely crowded, over 20 million, I always recommend that you want to wait until at least 10 o'clock before you size in. And also pay attention to the single candle volume. So let's see what we can learn from the intraday volume. Let's go into 1 month, 2 minute. So as a crowded ticker, the highest volume that's traded on a single candle was about 3.2 million on $9. On the single candle level volume, it trades about $30 million if it's back down. It had 4 million at 8. So typically after a big volume, there's follow-up volume to test the high again. Once the volume fades under the 4 million, it will be a good signal to enter. So still, when the pre-market shows weaknesses, I think it's a good idea to size against the pre-market high, but always pay attention to the pre-market volume. If it breaks, I think it's worth it to cut your losses and re-enter again. It's not really worth it to keep adding into the spike and potentially be really nervous and take a huge loss. So let's say I shorted against the pre-market high when they are around 950 or 6, risking 650. And when it breaks, I cut my losses and I choose another candle to re-enter. Even though I short into the bounce, let's say a 7, and then cover by the end of the day 4, I still come on top after the losses. With crowded tickers, pay attention to the volume, also pay attention to the time, because most people are likely to enter chase into the tickers. Majority of the time, momentum doesn't shift until 10 or 10:30, maybe 11. Make sure sizing small, and this is also a very low float ticker, only 1 million float. Make sure that you are sizing in correctly, and also take your profits along the way, because when there's low float, the spread is huge, very easy to get shaked out. Take your profits on the weaknesses of the candle. So you do not want to really cover being shaked out into those fake breakouts, and that's the best way to trade lower float. I would say nano floats under 2 million. Now we had another ticker which is very confusing. I didn't size it into NXX. This one went all the way down, traded 100% from the top. So this one traded 30 million shares in the pre-market. Of course, 3 million float, it's not a big float. Majority of the time we will see at least some push percentage in aftermarket open. This one did not push at all. It was trading like it's a 10 million float. Of course, sizing into the bounce when it already faded 60% or 75% from the top, it was not very ideal. If you bought shares, you can size into the push, and the major consolidation is at 8. So I will say shorting into the bounces, risking 8 is not a bad idea, but you can't really size in as big as you wanted. So the only few tickers that was tradable that I believe was NXX and VS and potentially DJT. Other than those 3 tickers, every single ticker was under 300K float or 500K, which is not really shortable. So I would recommend for beginners to avoid all these tickers. And it looks like the market is still holding really strong and we're still seeing tons of volume pouring in. So there's going to be another, I would say, 2 weeks of really hyped up week. Avoid tickers that's, I would say, below 1 million float. Pay attention to your borrow fees and overnight fees. And typically those low floats can charge up in 1,000% per night. It can be really costly and very expensive. So, all right guys, that'll be it of this video. Thank you very much for watching. I will see you guys in the next one.